mine. I think we do actually have a great panel for you. The premise here is basically dissecting M&A in our industry, which you know, as you probably know, is very, very early. But we've got for you three, I think, unique perspectives coming from investment banking, legal, and also the venture world. So with that, I guess I'll introduce myself, and then I think each of us will introduce ourselves. I'm Tony Scuderi, CEO of Imperi Partners. We are a crypto native investment bank. We're set up to have industry expertise in this space and help founders and executives navigate M&A in crypto. We've been in business since 2019, and we've done more deals in the space. There's some people who may be on this panel who don't believe any deals have happened, but I've got some evidence that suggests otherwise. So, you know, with that, maybe turn it over to Nick.
Hi, I'm Nick Carter. I'm a Bitcoiner at ETHDenver, but you know, glad to be here. And I'm a general partner at a venture firm called Castle Island Ventures. And I'm the crypto M&A skeptic on the panel because I would love for there to be more M&A in crypto, but it seems to me the liquidity is primarily obtained via, you know, basically tokens. And there seems to be much of a less of a focus on M&A, to my immense chagrin, to be clear. I'd love nothing more than to be as optimistic as you guys. But yeah, we can debate.
It will happen.
Hi, everyone. My name is Dario DiMartino. I'm a lawyer and an M&A partner at A&O. I focus my practice on crypto M&A, including joint ventures, mergers, acquisitions, carve-outs, divestitures, as well as very complex strategic and private equity transactions. I'm also the head of our fintech and blockchain practice. We have about 6,000 people, 30 offices, 40 jurisdictions, and we do work across the globe. There's no such thing as an M&A transaction that only is limited to the United States. Crypto companies, by definition, are cross-border, and so it's great to have a platform that can serve clients across the globe.
Awesome. Hey, everyone. Hope you guys are having a good ETHDenver. My name's Joyce Yang. I'm the founder of Global Coin Research. We are a research and investment DAO, and we've been in this space since 2017. I'll be your moderator today, and I think even before this panel has started officially, we already gotten into the debate of, does M&A in crypto really exist? I still have my skepticism being a venture investor as well, similar to Nick. So maybe we can have Nick, who was, you know, actually no, let's have Tony and this other gentleman here to share your experiences. Sorry about that. Share your experiences first and what you've seen in the space, and then we can also have Nick kind of add on.
Sure. You want me to start?
Happy to start, yeah.
Go ahead.
So I've been in this space since 2014, and initially, to your point, it was mostly about minority investments in crypto companies. So I started representing some of the largest tech companies, some of the largest financial institutions that had an interest in this space and just wanted to park some money to basically learn about this space. But then as the industry started to mature, we started seeing actual M&A. And now most of these transactions are private, to your point. There isn't a whole lot of data available out there. There aren't a lot of public companies, right, that are being bought, so where you can go on Edgar and find out all the terms. But transactions are being done. I mean, that's basically all that we do in my practice. And we've got hundreds of lawyers working every day on crypto M&A. And I can give you some examples of some of the transactions that have happened and some of the trends that I see in this space. So, you know, last year we saw a trend that I think is going to continue this year, where there's going to be a lot of consolidation among custodians because, you know, compliance comes with a lot of cost, and a lot of custodians basically cannot afford to meet all of these costs, and so there's a lot of consolidation and acquisitions in the custody business. To give you an example, Ripple bought a Swiss custodian called Medico last year. It was a pretty substantial acquisition. There's also a lot of regulatory-driven M&A. Sometimes it is difficult to basically apply for a license, and so a lot of market participants prefer to just buy a company that's already regulated, that's already obtained some of those licenses. And so you can think about Coinbase and their recent acquisition of One River. digital asset management is an example of that trend. That, by the way, we saw, since the beginning of this space, like since 2013, a lot of companies were doing M&A basically to acquire licenses. A lot of M&A is also happening in order to acquire talent, what we call acqui-hires, right? I mean, despite the fact that this industry has been around for over 10 years, there's still a scarcity of sophisticated talent that can actually work. And so we see a lot of acqui-hires. We also saw a lot of acquisitions in the tokenization space, right? DTCC recently acquired a company called Securrency, and that's another trend that I think is going to continue, right? A lot of tokenization of real-world assets, and so there's going to be a need for companies to acquire a technology stack that can facilitate that type of transactions. And I can go on and on and on, but Tony, I'm sure you have some examples too.
Sure. Rather than give examples, maybe I'll back up a second. Our job is to optimize outcomes for our clients. And so when I think about how M&A will develop for our industry, what we haven't seen almost any of is companies really coming from outside of crypto to buy crypto companies. And I strongly believe, in our thesis for starting this firm, is there is a wave to come. People ask me all the time, when is it happening? And I don't really know the answer to that. What I can tell you is there's a high level of interest. It's extremely difficult to build things, as you guys probably all know, in our space. And so ultimately, there will be this motivation and we believe a wave of M&A coming from outside of crypto. So oftentimes when we're sitting down with clients, we're giving them the advice that if they're young, energetic, and love what they're doing, to keep building, to raise growth capital, to hit key initiatives, and this market will really develop in a much more robust way, we think, in the years to come.
So if I may, let me present my sort of more skeptical case, and then you guys can respond to it. So the data problem is real. I looked at PitchBook the last 3 years. They said there are about 300 M&A events, and they said the biggest year of M&A in terms of disclosed transactions was 23 with $1 billion or so. So like clearly the real number is much higher because we just don't have, the terms are often not disclosed. But there's a few things that I think, from my seat as a VC, appear to be impediments to meaningful M&A, at least in this market regime. First of all, on the acquirer front, you don't have these behemoths that have a massive balance sheet and that can acquire dozens of companies. So I think Coinbase and Ripple are probably the most active, unless I'm mistaken, in terms of the big crypto incumbents. So you do see, and we've had portfolio companies acquired by both Coinbase and Ripple, and but there don't appear to be enormous, kind of like very well capitalized firms. Even the biggest firms in crypto are kind of always clinging to life. So that is one thing that seems to be missing. Outside, in terms of outside firms looking in, the problem we have in this country is regulatory. Like the banks are basically inhibited from dealing with crypto. That's just the posture that the bank regulators took. And the banks that have tried, like the BNY Mellons of the world, have been totally stymied, unable to really launch the products they would launch. So the acquisitions that might have happened there are not. So of course, potentially there's a regulatory catalyst if SAB 121 is lifted and the bank regulators become more favorable to crypto, maybe we see more sort of TradFi acquisitions. But that is an inhibiting factor, and the banks doing the M&A seem to be foreign banks, from what I've seen.
Yep.
The last thing, this is a crypto idiosyncratic thing that also inhibits M&A, is you have the zombification of companies that would otherwise sell themselves but have enough runway to cling to life. And that's due to basically token issuance dynamics. So in other software investing landscapes, if you're going out of business, you're running out of runway, you sell yourself, right? Or you shut down return capital. In crypto, you have a lot of projects that may not have achieved product market fit, but they are able to raise enough capital via the issuance of a token such that they don't feel the immediate pressure to sell themselves. So I think that's the thing that's different about crypto is you have pre-product market fit startups that are nevertheless somewhat liquid via tokenization. So I think they're less willing to sell themselves. Curious for your reactions.
I think there's you touched on a lot of things that are relevant, and I would say selling your company is a personal decision, and what we do have is a lot of young founders who, to your point, in cycles have had tremendous access to growth capital, whether that's through tokens or equity. And so the opportunity to continue to build and possibly even get some liquidity as a founder is really appealing, especially as early as it is. And I'm the one telling them a lot of times, don't sell right now. We got this term sheet and here's what we're doing. Well, guess what? If it is crypto to crypto, to your point, which is the vast majority of deals that we see today, and the deals that really can happen because of the regulatory and other issues, that can be fine if you want to continue to go and build with that company. But it is limiting when you think about the prospects of having the S&P 500 looking at companies in our space and thinking about how they're going to execute on their crypto strategy and how valuable it is to them. And those motivating factors, which are basically, is my share price going to go up? If I'm a public company thinking about acquiring crypto, am I going to get hit by the regulators? So if I'm a financial services company thinking about buying something crypto, like these are the non-starters today. At the point we see Main Street companies starting to execute in a relevant way in crypto and crossing over, that's when you'll see the motivation from their competitors that they need to do something. And your guess is as good as mine when we're going to see that. But those are some of the key factors for me that will break down these barriers and allow that wave that I'm talking about to come.
Yeah, and in some cases, M&A is inevitable, right? If you want to enter a new market, a new jurisdiction, or if you have scarcity of human capital, there's no other way to do it other than through M&A, right? And to Tony's point, yes, I've seen a lot of crypto to crypto M&A. I've also seen a lot of traditional financial institutions buying crypto companies, whether a majority interest, a minority interest. PayPal bought Curve, Visa made investments, right? I mean, it's more diverse that you may expect. And I think to your point about regulatory, I mean, that's basically what I do. I would agree that's very frustrating that after 10 years, we don't have a comprehensive regulatory framework. But what happens is that instead of not doing deals are structured in a way that comply with the regulatory framework through a combination of US and non-US entities. So I think there's a way to make deals and get them done, even despite all the valuation discrepancies that we've seen last year.
There's one other issue that you guys all know, and that's cultural. I think conceptually that Jamie Dimon really doesn't want to buy a crypto company. It's cultural in that organization and in many companies, right? If there's a champion for crypto in the organization, if they've really decided, like actually MasterCard and Visa, for example, that they do want to execute in this space over time, there's champions for crypto in the company. That is going to be a key factor in whether we'll see capitulation ultimately and they'll come and buy.
I think what we had expected to happen, this was kind of part of the premise of our firm. Obviously, there's only two ways to get real liquidity as a venture firm: acquisitions and IPOs, which are vanishingly rare. Where we'd maybe Circle will go public at some point. I suppose they think they will. What we thought was that TradFi would see that they had to engage in M&A in order to enter the crypto opportunity in the US. But it seems to me that most of the acquirers in the more traditional financial services space are actually more fintechs that aren't as heavily regulated and don't face the pressure. And one anecdote that really sticks out to me is during the bank crisis in in spring of 23, you had the two most crypto-friendly banks that went down, Silvergate and Signature, right? And they had crypto practices. They ran clearing infrastructure for real-time liquidity provision between crypto firms. A lot of it was useful for stablecoins, Sun and Signet. What happened to those assets during the divestiture, the FDIC receivership? Those assets went nowhere. They were just furloughed. No bank bought them. No bank wanted the crypto exposure. They didn't want to be told off by the FDIC for having a crypto exposure, right? So there is still this massive impediment to M&A, it seems to me, based on the continued hostility regarding the crypto industry from Washington. That it hasn't changed. Doesn't seem like it'll change this year. Maybe after November it will.
Banks are the hardest, 100%. And because of that regulatory aspect that you mentioned. But that doesn't mean that payments companies and fintechs and non-financial companies won't want to execute in our space and buy companies. But you're 100% right. We've got to solve regulation in crypto in the U.S. And get clarity to give those prospective buyers confidence to come and acquire in our space.
Yeah, I couldn't agree more. There are a couple of pending bills in Congress that make me feel a bit optimistic, right? There's the Loomis-Gillibrand bill that's relatively comprehensive. Is it going to pass? No, not anytime soon. What I think is going to happen instead is that they're going to handle one piece of crypto at a time, probably starting from the low-hanging fruit, which is stable coins, and then they're going to, take it one step at a time. But I couldn't agree more. I mean, today we don't even have a definition of what a security token is, or clear lines between securities, commodities, payment methods. So sometimes we do due diligence on a target company and we say, well, you're basically like a combination of all these things. You have to comply with a very broad variety of regulatory frameworks that sometimes are inconsistent with each other across boundaries, across jurisdictions. So big issue, not a total deterrent, right? But definitely an issue.
Yeah, following up with that, given the current market situation and Bitcoin now, hitting $60,000, I'm curious what you're seeing from your side when it comes to buyers or seller activity, and just any kind of difference or changes in reception coming from, Web2 or any of the other potential acquirers that you're seeing.
Sure, I can start with that. I think that we have some founders who've basically survived our crypto winter recently, and they're thinking about a business in many cases that's really monoline, right? We're a group of founders. We started this business. We do one thing really well. Do we really want to expand the business into these other areas to make it sort of less pro-cyclical, more durable over time, or should we think about selling? If we are going to think about selling, shouldn't we probably do that at the top of the next bull run, which it seems like we've commenced here? So, and that's, I think it's natural to think about those things. And so yes, we're getting these sort of early calls from companies to say, we're not going to sell right now, but we understand what our business is, and it sure looks like there's going to be an interesting opportunity on the horizon, and I agree with that.
I think there'll be a wave of selling here, actually, as a lot of the firms that raised during the most liquid portion of the cycle in 21 and early 22 reached the end of their 18 to 24 month runway associated with the raise. And startups tend to raise in a phased manner, and the valuation they were able to attract in 21, 22 probably isn't, for the most part, what they're able to get today. And they may not want to do a down round, so they're coming to the end of their sort of runway horizon and are now motivated to sell. The other thing, though, is tokens are always a liquidity mechanism for many of the startups that we follow in our portfolio. And as liquidity returns to the market, the motive to issue a token as an alternative fundraising mechanism becomes greater. So some startups are able to defer those M&A decisions until later. So we kind of see both things, but I generally agree. Like Wall Street, traditional asset managers, they do now see the opportunity in blockchains. BlackRock is launching a tokenization product that will be a very key moment for the industry. So I do think there will be more outside-in interest, and we're hopeful about that.
Yeah, and look, M&A is a confidence game, and with interest rates stabilizing, recessionary fears disappearing, I think that more buyers are coming to the M&A market looking for quality targets. At the same time, I think sellers are understanding that 2021 valuations are not coming back anytime soon, and they're getting more willing to accept more realistic valuations. But even in cases where there's a valuation discrepancy, through the use of earnouts, you can bridge that valuation gap. And I've seen the past year and a half, a lot of very creative ways to structure earnouts, right? Not just the usual EBITDA, net income, and revenue-based earnouts, but a lot of different milestones to account for the specific crypto market.
Yeah, hello. Let's talk about that a little bit more, Dario. I love to dig into a hypothetical project now looking to sell to a, say, multi-billion-dollar FTV project, right? What do they need to consider? What do they need to think about? And what kind of terms are you seeing that's most founder-friendly?
Look, in terms of how to bridge the valuation gap, a lot of sellers want to structure their earnouts based on revenue metrics because they don't want to give a buyer the ability to potentially manipulate those metrics post-closing, where buyers typically want to have a net income threshold or metric to have more control. And so what typically happens is that you start with this conversation, net income versus revenue, and then you sort of end up in the middle with an EBITDA-based metric. And then there's a lot of conversations around retention of talent. One of the most important criteria for the success of an M&A transaction is a successful integration. According to a recent study, more than 30% of the employees end up leaving within the first year after closing. And so it's super important for founders and for sellers to make sure that there's blending with respect to the treatment of the employees to make sure that they will be happy post-closing. If you can't secure a talent, then your success is quite frankly tarnished.
Yeah, Tony, you have anything to add?
Yeah, just that, a lot of these issues are solvable by structuring. We still have, I think one thing that's unique in our industry is, as early as it is the amount of subjectivity. So the lack of that financial data and being able to reasonably model it over time. And so the challenge of modeling and integration. So how do you solve for that? And Dario mentioned a few ways, but clearly in the structuring, if we're talking about a higher stock component, where the target is effectively going to own stock in the combined company, and so they're sort of solving for is that 2021 print, is that really the value of the acquired? What's our stock worth? Well, if we do stock for stock, it matters less, right? Or if we change that component. So there's a variety of things that we can do in structuring to kind of close that gap. But clearly one of the impediments is the subjectivity in these deals and in valuing companies in our space.
What's the typical timeline that you're seeing for projects doing deals now?
Sorry, what do you mean by timeline?
From initial conversation to closing?
Oh, to consummating a transaction,
Yep.
if they want to sell. So we're typically a sell side banker, and it depends. Sometimes folks come to us with a term sheet and say, this looks pretty good, but can we do better? And those can move quickly, a few months. Other times it's more exploratory. It's we're thinking about doing this. We want to start to understand who the universe of buyers might be and what they think about us. And that exploratory process can take a year or more.
It also depends on whether you need consents or regulatory approvals between signing and closing. So sometimes you get a signing deal in less than 3 months, right? If you're really diligent and you've done a lot of thinking before the term sheet. But then you sign, you need to get third-party consents. You need to get regulatory approval. So in my experience, if you do larger transactions, like anywhere above the 120 million that's required for antitrust purposes, and therefore need to file HSR filings, it can get anywhere between 6 months and a year and a half. So it varies.
Any thoughts, Nick? I feel like you're thinking.
We when we have a startup that wants to sell itself, we generally tell them they're going to need at least 6 months
Yeah.
to run the process. And so if you have 12 months of runway left, you better start pretty soon.
Yep.
Because you don't want to be negotiating an M&A transaction when you have a month or two of runway left. Of course, you're in a much worse bargaining position as time goes on.
I totally agree, and I think more founders should actually learn more about how to do M&A, because in the last cycle, we had a lot of founders who came to us, 3 months into going bankrupt essentially and saying, hey, what do we do? And then we are telling them to explore an M&A option, even with just the acqui-hire, and they're like, we might not even have time.
Yeah.
And it's a very traditional. I guess M&A is still a very traditional finance concept to many founders, especially in crypto, because the crypto founders are quite young. Many times they don't have experience in that particular. You really need a lot of expertise and knowledge. So I really encourage, even now in this current market, for founders to learn more about the optionalities of what they have to do.
Yeah, our normal advice is actually be talking to acquirers, potential acquirers, casually in the normal course of your business, even if you're not actually looking to sell yourself at all. Oftentimes, your big clients are potential acquirers. So keep them abreast of your progress with an eye to a potential acquisition in the future. Obviously, that doesn't apply to every single high-growth startup. Some might want to take it all the way, try and get to IPO, something like that. But your acquisition process is going to be much cleaner if you have an established relationship with an acquirer as opposed to starting from scratch when you have 6 months of runway left.
I agree with that. I would also add that clear communication is key. I've worked in a variety of deals where sometimes issues are disclosed in the middle of the process and cause havoc. So think about a lawsuit, a data breach, an employment misclassification, issues with open source software, right? My advice would be to communicate these issues to the buyer ahead of time to show that you've got a handle on your business, that you've been thoughtful, you've been preparing, and you have solutions for the buyer. Because if you do it at the last minute, the buyer may want to retrade, the buyer may want to adjust the valuation, or quite frankly, terminate the deal. There's also been a recent case in Delaware where the buyer was allowed to terminate a deal because between the time of signing and closing, the sellers disclosed phantom equity. And even though it wasn't material in the context of the overall transaction, the Delaware Court of Chancery said, well, this was a fundamental rep, it's breached, and so now buyer can just walk away from a deal without paying any termination fees whatsoever. So clean your cap table and communicate early.
Yeah, nothing to add on that. I mean, we harp on it all the time. It's never too soon to learn about how these processes work if it could be relevant for your company eventually.
Yeah, I'm curious about any common blind spots that founders, especially in crypto, have when it comes to even doing basic relationship management with their potential acquirers, right? It's something that, besides customers who they probably would put first and foremost, but many times they don't have experience, don't have experience COO, don't have an experience like operations, don't have experience auditing. So these things all needs to be in place, which we definitely need overall as an industry. I think my last question, and feel free to add on anything else that you think I missed, is are we going to see a kind of a new paradigm of different types of M&A transactions in this cycle? Meaning, are we going to see, throwing out their crazy ideas, NFT acquisitions, right? Like we're seeing, or any different kinds of, Bitcoin roll-ups, having synergistic potentials, right? Like
NFT issuers tend to actually, we see a lot of activity on the acquisition front. Yuga Labs have been very active in making acquisitions. There's a big transaction recently, I think, between Moonbirds and I don't remember who the buyer was. So we do see acquisitions there. What I'm interested to see more of is actually token projects or even L1s and L2s merging or acquiring. I haven't seen much of that. I haven't seen many DAOs or sort of like DeFi native, crypto native projects sell themselves or be sold. I think Rari is one example, but I haven't seen a lot of that. So I'd be very curious to see if standard transactions can be worked out in that sector.
Yeah, we've seen some of it, and I think we will continue to. And I guess I would say, those deals are have their own interesting dynamics. But I think overall, when we have more bullish markets, we tend to see more deals, and I think that's going to happen across sort of deal types. And I think we will see. We'll see at least a couple of transactions coming from outside crypto this year, and I predict we're going to get one in the billion plus range as well.
All right.
I would agree with that. I expect mega deals this year. I also expect more consolidation among custodians. I expect a lot of non-market participants to tap into the whole metaverse and NFT marketplace, right along the lines of what Nike and Adidas already did. And also a lot of acquisition of companies that develop layer 2 scaling solutions. Those are the trends that I expect.
Well, it looks like we're out of time. Thank you guys so much.
Yep. Thank you, everyone, for listening in. Make sure to find Tony and Dario after you have questions about this, because they're the experts. Thank you.
Thank you.